Most lenders build their credit policies around what's called the 5 C's of credit. 5 C's of credit. The first one is going to be what's called character. Now, character describes as will you repay the loan? So when you think about your character, they're going to look at your credit history. They're going to understand, the payments that you've made in the past, and do you have a good rapport with the other banking institutions that have made good payments, and you've been on time with all your other loans in the past. The other one is going to be your capacity. Capacity is, can you repay the loan? That means it's going to look at your availability of credit. It's going to look at your bank account, your checking, your savings to determine, do you make enough? Do you have enough income that's actually going to be able to make payments on the loan that you're applying for? The other one is capital. Capital, they're going to look at all your assets. Your assets meaning, what do you own? Your bank accounts, checking, savings. What is your overall net worth? Essentially, your assets and your liabilities. What is your capital like? If you have a negative net worth, then obviously your capital looks kind of bad. So they're going to look at your capital. In addition to capital, they're going to look at what's called collateral. Your collateral, of course, is what happens when you don't pay the loan? What are they able to repossess, right? So if you are applying for a car loan, then you're putting up that car you're purchasing for collateral. So if you don't make the payments, then they repossess the car. If you're applying for a business loan, they're going to look for collateral for that business. So what type of equipment do you have that you can put up for collateral? Or do you have any personal assets that you put up for collateral? If you're not able to repay the loan, then they take possession of those assets. And then lastly is the conditions. Condition is going to relate just to overall environment of your income situation. So your job security, how stable are you at your job? How long have you worked at your job? If you've been at your job, 2 months, where they're going to go deeper. Where were you before? And how long were you at that job? So they want to look at another thing that they want to look at is just your stability. How stable are you so that there's income flowing in? The main reason looking at all this, because they just want to determine, are you going to be a good customer for them to lend to, because you're actually going to pay back the loan, right? So that is the 5 C's of credit in a nutshell. You have character, capacity, capital, collateral, and conditions. And that determines your ability to be approved or denied a loan.